Hello guys, Ivan KB is here and welcome to Shark Numbers. I noticed a lack of comprehensive tutorials on Binance Futures where people often talk without demonstrating the necessary steps. That's why I have decided to create my own tutorial to address this gap. In this video, I'll guide you through the Binance Futures platform, and together we'll take a look at the major features. We will explore the major tools available. We'll cover topics such as leverage adjustment, take profit, stop loss, hedge mode versus one-way mode, and much more. This tutorial on Binance Futures will be comprehensive, and I've included all the timestamps for your convenience. So without further ado, let's get rolling. Before I dive deep into features, I want to mention that once you open your brand new Binance Futures account, you'll need to take a test. This test is designed to unlock the terminal and shift the responsibility onto you. The questions in the test are logical, and they essentially make you acknowledge that there is a possibility of losing all your money here. And that's true, especially when using an extremely high multiplier, as you run risks of losing everything with your position being liquidated swiftly. Anyway, once the test is over, this is what you're going to see on the screen. At this point, you can start trading. The most basic way to begin trading is by opening either long or a short position through the market option, and I'm going to show you how to do it. I'll be using a 2x multiplier. Here is how you set your multiplier. I don't want to risk too much because I'm not trading for real. This video is designed to teach you how to use Binance Futures. Before I open my position, I want to show you the default settings. It's currently set to cross. So what is it? What does cross mean? Cross margin mode means that all positions under the same margin asset share the same asset cross margin balance. In the event of liquidation, you risk losing your entire available balance. My entire balance is 100 USDT. If I select cross margin mode, I risk to lose 100 USDT. Let's discuss the pros and cons of this. If you are just starting and you're hesitant to risk more than what you are trading, you could choose the isolated mode. In this mode, you only risk to lose what you allocate for a particular trade. Experienced traders who use high leverage usually opt for cross. If I, for example, traded 20x leverage and I expect the BTC price to increase by 10%, but it temporarily goes down by 5%. My position will get liquidated in the isolated mode. So I want to choose cross in case the price goes down significantly. For now, let's set it to isolated and let's proceed. So now let's try to open a long position. I'm going to select 10% and market, and I'm going to click on buy long. Let's try to go long. I'm going to select 40% and I'm going to click on buy long. Here my position is now open. I can see my PNL. Here you can see 2x. This is my multiplier size, 56 USDT. Entry price, mark price. Liquidation price, we're now limited by this price. And it seems okay because I'm trading at 2x. If your multiplier is 10x or 20x, this price is going to be much higher. So there are several ways I can try to close this position. The easiest way would be for me to choose price at which I want to close this position. Right now, the current price is 28,103. So let's say I want to close at 28,107, and then I click on limit. Now the system placed the limit order for me. What else can you do? You can click on this sign, and here you can set your take profit and stop loss. The difference between placing a limit order and setting up take profit lies in their functionality. Take profit operates slightly differently. Once your desired price is reached, the system triggers a market order. On the other hand, when using the limit option, the system places a limit order in advance. Stop loss functions in a similar manner. When a specific price is reached, the system will close your position at the market price. Now let's focus on the drop down menu. What is last versus mark? This section is crucial, and here's what it means. Currently, we're trading BTC USDT, and the price of BTC on Binance Futures is $28,069. But it could be different on other platforms. It could be different on Kraken. It could be different on Bybit. When you select mark, you pretty much inform the exchange. You inform Binance Futures specifically, that you want to follow the overall market instead of relying solely on the particular exchange. To simplify the process, if you want to protect your stop loss from being triggered by market manipulators on Binance Futures, select mark. However, if you want to close your position quickly, if you want to swiftly close your position as soon as possible, select last. It looks like our position was already closed. So I'm going to open another position and I'll show you how to set up take profit and stop loss. This time, however, I am going to open a short position. Something exciting here. I'm going to select 44% and I'm going to click on sell short. So right now we want Bitcoin to go down. We want BTC to decrease in value. This is how we make money when we short trade. Let's try to set up take profit and stop loss. But before we do this, let's take a look at the entry price. Our entry price was $28,059.90. So obviously we want this price to be a little bit lower so we can make profit. Let's say $57.90. So our potential profit is 1 cent. Stop loss has to be above the current price. So let's make it 70. This is how much I'm going to lose if my stop loss is triggered. This is how much I'm going to make if the price goes down to 28,057. I'm choosing the mark option and I'm going to click on confirm. Here you can see the numbers. You can actually see your stop loss and take profit. You can also set up a few limit orders. If you want to, you can place limit orders simultaneously. Maybe you want to partially close your position at a certain level. Boom. In actuality, I closed my position and made a profit. However, due to the fees involved, I ended up losing more money than I initially gained. This is another important aspect to consider. Prior to commencing your trading activities, it is crucial to examine the fee structure and understand how it will impact your overall profitability. You can visit this page on Binance and you can take a look how much Binance Futures charges you for each individual trade. You can find this link in the description. Now you are familiar with the most basic features on Binance Futures. Technically, you can begin trading, but hey, I promise that this tutorial is going to be comprehensive. How about we take a look at advanced features? What does Binance Futures have to offer? To enable trading in both directions, you need to adjust the position mode. Simply click on this settings icon, then click on preference. Here, click on position mode. There are two options. By default, you will have this one selected. You'll need to switch it to Hedge mode. Select Hedge. Now you can officially trade in both directions at the same time. If you observe closely, you'll notice that the buttons on your sidebar have slightly changed. Instead of buy long and sell short, now you have open long and open short. Personally, I find this setup to be more convenient. It helps avoid confusion as you now have dedicated buttons for opening and closing positions. Rather than generic buttons for buying going long and selling going short, you now have open long and open short. Now I will demonstrate how to open a limit order and set up the take profit stop loss feature in advance. We're going to select limit. We'll click on this checkbox, and now we're going to set up our first order. This is the price at which I want to go long. I'll probably have to adjust it since we see that Bitcoin price is going up. Let's discuss the fundamental difference between these two sections and those two sections. It says take profit price, stop loss price. So what's the difference between this take profit and that take profit, this stop loss and that stop loss? To simplify it, when my position is open and I reach a certain price, the system will automatically place a limit order with that price. So this price works as a trigger. This is the actual price. I can tell the system that at $28,052, I want it to place a limit order with this price. The stop loss section functions in a similar manner. When the stop loss price is reached, when this price is reached, the system will initiate a limit order with this price, stop loss price, to close my position. In both cases, the system helps automate the process of setting price-based orders for taking profits or minimizing losses. And I'm going to click open long. My position is not open yet. Once we hit 27,963.5, our position will be displayed in this section. While we waiting for our first position to open, I'm going to try to open the second position simultaneously. Let me see, 27,963. Even though we selected the same exact price, once I hit open short, this position is going to open automatically. Why? Because we're currently sitting at a higher price. So the system thinks that it's more beneficial for us to open our position right now. There is a way for us to actually wait for this exact price. I'm going to click on open short. I want to show you something else. There is a way for you to actually wait for a particular price before a position gets open. There is a feature called stop limit. This feature combines a stop order and a limit order. It allows traders to set a specific stop price at which the order is triggered and a limit price at which the trade is executed. This feature provides control over entry and exit points in trading. So let's say if you want to go short, but you only want to go short when you reach this price, you can use stop limit. You can use this feature. If you want to go long, but you only want to go long if Bitcoin reaches 28,000, let's say 400, a random number, you can also use this stop limit feature. In fact, you can let the system know that, let's say, once Bitcoin reaches $28,400, you want to open a long position and you want to close your long position around this area and you want to set up your stop loss around this area. So it's all possible. You have full control over your entry points and exit points. Here's what we're doing right now. Once BTC reaches $28,032, I want to place a limit order at 28,031. And I want to have my take profit at $28,033.80. I want my take profit to be triggered at this price, but the actual price is going to be $28,034. My stop loss will be triggered at $28,028.20, and the actual stop loss price $28,027.50. I hope it's not too confusing. So let's quickly click on open long and see what's going to happen. Okay, I submitted my order and now I'm waiting. This type of order is called stop limit and you can see it here. If you change your mind, you can click on this bin and you can always cancel your order. And you can do the same with every order that you have. You can also click on cancel all, or you can cancel a specific type. When you trade via Binance Futures, it's essential that you switch between two of these sections. You look at your positions and you look at your orders. You want to make sure you are aware of what's in your pipeline. Let me quickly show you how this close section works. Let's say I do have an open order and I want to close it. I can navigate to this close section. I can click on close. I can choose specific amount that I want to close. I can close at a limit, or I can just click on market, and I'm going to click on close short. So you see now all of my orders associated with that position got canceled and my position closed. In the meantime, if you did not notice, we opened another position, and that was our long position. We finally reached the entry price, $28,031, and now we're waiting. Unfortunately, this position got liquidated, but if you haven't noticed, everything happened automatically. I don't have to look at the screen. I already told the system what I expected it to do, and all I had to do was to wait. I was waiting. I don't have anything open at this point, so how about we explore the stop market sections? The difference between a stop limit and a stop market order lies in the execution method. Stop limit order is a two-part order. On the other hand, a stop market order is a simpler order type. When the stop price is reached, it triggers a market order to buy or sell at the best available market price. The trade is executed immediately at the prevailing market price. In summary, a stop limit order offers more control over the execution price but does not guarantee execution, while a stop market order prioritizes quick execution but may result in a less precise execution price. Let's try to open a short position and see what's going to happen. I'm going to click on open short. My position is open and I'm waiting. Close short, close short. This is my take profit setup and stop market order. And my stop loss got triggered. Finally, I want to walk you through trailing stop. A trailing stop order is a type of order that adjusts the stop price as the market price moves in a favorable direction. It trails, in a way. It trails the market price at a specific distance or percentage. In simple terms, a trailing stop order on Binance adjusts the stop price based on market movements, allowing traders to lock in profits while still giving room for potential further gains. If you expect Bitcoin to go up like this, then it makes sense to use the feature. But if Bitcoin goes up and down like that, you'll probably lose money by utilizing the trailing stop feature. Let's see how the feature actually works. I'm going to place an order. All right, let's try to open one order and see what's going to happen. Activation price 28,150. Fallback rate 0.1%. We can keep an eye on it. Stop loss will get readjusted automatically. TWAP stands for time weighted average price. This feature allows traders to execute orders based on the average price over a specific time period. So you can basically set a duration in minutes and a total order quantity. The system then will automatically split the order into smaller chunks and execute them evenly over the specified time period. If you work with large amounts, it will make sense. You see, minimum total quantity is 0.354 BTC. But this feature is useful for institutions, for big investors, for someone who has a lot of money. If you don't want to get rid of your crypto all at once, if you don't want to crash the market, you can utilize this feature. However, if you're just a retail trader who does not have access to large chunks of money, forget about this feature. It's not going to be needed. Post only is similar to limit feature. You can just place a limit order and it will get posted. And this is all, guys. You're now familiar with all the main features on Binance Futures. I hope you found this tutorial useful. If so, hit the like button, subscribe to my channel, and I will talk to you soon. Ivan KV out.